Are you a successful IT professional and need help optimizing your compensation plan, navigating your taxes, investments, and protection? It's time to rewire and retire with Mike. Listen in as Mike gets you the answers you need to move forward. Now, on to the show with Mike.
Hello and welcome to Rewire and Retire with Mike Guarino. Mike, how are you this morning?
I'm cold, Eric. How are you?
Well, yeah, I guess we're about the same then. It's a little chilly.
Yes.
And not the good kind of chili. My wife makes amazing chili, which is just great on a really cold day.
Like spicy chili or just regular chili?
Well, she'll spice it as much as anybody wants it. But yeah, we usually have like a big group, so she kind of tones it down. We just add our own stuff. But when she's just making it for us, like we're going to freeze some and stuff, oh yeah. She'll bring the heat, which is nice. I like it.
You know, they do have this thing called Federal Express that you can freeze stuff and ship it, from you to me.
Really?
Yeah.
Huh. Mm-hmm. Okay. Well, she does like a hatch green chili, which I think you'd find amazing. So I'll have to talk to her about that.
I'm here with open arms.
All right. Good deal. Speaking of open arms,
yes.
That has nothing to do with what we're talking about today.
No. Well, a little bit.
Okay.
My arms are always open.
I know, because you're very giving and receiving.
Very accepting.
That's right. That's right. So what are we talking about today?
10 questions that everyone should ask when interviewing financial advisors. Really fun stuff, but you and I talked a little bit offline before, and it just so happens that in the business you go through seasons of things, just for some reason, and there's really no explanation to it. And just recently I've been getting questions from clients and referrals and people coming in just through our process that are asking, like, I don't want to tip my hand, but they're asking us a lot of questions. And I know I gave you that list, so we can go into that. But it brings back memories of when I first started out in the business in 2006. We used to have to call people up, clients, and make recommendations if we thought things were suitable for them. And I'll never forget this one conversation. It was basically a bond in our inventory that looked really good. Mm-hmm. And so, I went through my list of people who it was suitable for. And again, I was young and I was just kind of cutting my teeth in the business and, nervous to pick up the phone and make phone calls, but that's how you grow. So I pick up the phone, I call this person. I'm like, hey, I got this bond paying good interest. It's AAA, it's insured. The corporation's, a solid corporation backing it. Mm-hmm. And the person's like, well, I don't know. Do I really need it? Is it a good fit? And I'm like, yeah, I'm telling you, it's. I think it's a really good fit for your portfolio. It's, again, it's AAA rated, great corporation. And, the interest is really, really good. Well, I don't know. Can I think about it? And, I'd say, look, I'd love for you to be able to think about it. And I'm not putting any pressure on you, but I kind of need to know now. It's inventory, right? These things are here and then they disappear. Well, I'm really not sure, if it really makes sense for me. And I'm like, Mom, I'm telling you, this is a great bond. I think you should just get it.
Some trust issues?
Yeah, moms are moms. What are you going to do?
I love moms. And
she
I do want to be clear.
She wound up buying the bond. She actually bought it.
Well, see, that's a huge, that's a huge step in that relationship.
Yeah.
Yeah.
But I digress. Yeah.
Well, and I want to be very clear with the audience. I joke at the front end. I'm like, so Mike, what are we talking about today? I know what we're talking about today, but I get stage fright, and you know that. I just don't like to, say what we're talking about. So anyway, I have questions I'm going to be asking Mike because these are the questions that are being asked right now, and I agree 100%. Looking through these questions, this is what people should be asking, truly, right?
Mm-hmm.
Okay,
I think so.
Well, let's start off. Mike, are you a fiduciary?
A what?
Fiduciary.
Yes. So I think we talked about this way back when, but the end of last year, I went through a training class and examination process to become what's called an accredited investment fiduciary. And the initials we wear when we get that designation is AIF. And it's an important question to ask advisors because, a fiduciary means that they're going to put your needs first. Now, look, I want to imagine that we live in a world where every advisor is already doing that. But Unfortunately, I can't say that's true or not true, but I get the sense you can never say 100% of anything is true, pretty much. So my thought process is ask if they're a fiduciary, ask if the advisor is going to put, your needs before anything else, even comes to light. So yeah, I'm an accredited investment fiduciary. Very glad to have that, those initials after my name. Not that that's the important part, but it just represents that, look, I'm on your side. I'm going to do what's right for you. And that's really what we bring to the table. So asking if someone's a fiduciary or accredited investment fiduciary more specifically, very, very important question to ask. And again, I believe there'll be a trend in our industry where anybody worth their salt will have this designation after their name.
Yeah. I think that it's highly important. So that's great, and I'm glad that you've got it. So the next question, and I can just hear your mom saying this, how do you get paid?
Yeah, it's interesting you brought mom up because back in the day, and we've talked about this, in 2006, that quote phone call that I made to mom with the bond, that was a brokerage account. That was a transaction. So there's a couple ways advisors get paid now, and more coming to light, actually. So the first way, and everybody's kind of used to it, they had a stock broker who they'd call and they'd buy and sell stocks or buy and sell bonds. And, you had to have certain licenses and things to do that. And that was a transactional process. And when we say transactional process, that means, we get a commission for it, right? If I bought a stock back in 2006 from Mike Guarino, Mike would get paid a commission for me to buy the stock from him. So that's one way advisors can get paid, a commission. So it's like you buy this, you pay that to own it. And we've talked about that. That's kind of like fading. And the more, the rising sun, if you will, if that was the setting sun, this would be the rising sun, is an advisory, what they call a wrap fee or an advisory fee. This way the advisor gets compensated on just, a percentage of the assets, on an annual basis. So, and everybody has a different fee schedule. Everybody charges different amounts. And again, we'll get into this as we go through, the other things that people should be asking, the other questions. The second way we get paid, advisors can get paid, I should say, is through advisory fees. And this is really common now. This is kind of replacing, the brokerage world of 2006, like I referred to. And advisors get a wrap account. They put a client into a wrap account. So they pay a fee to have the advisor manage the investments and not necessarily commissions involved anymore. So it's a way that advisors can really configure and construct portfolios, rebalance them, and kind of keep them on their correct investment objective over time without the client having to pay commissions every time changes are made in the account. And in some instances, when you bring in advisory accounts, you actually are giving the advisor the authority to make changes in the accounts without having to call you. And that would be a full discretion account. Now, there's many mutations or variations of that. But, in essence, an advisory account is wrapped with a fee, and there's very little or no transaction costs in those accounts. And again, the advisor, if they're a fiduciary, are, using their judgment, their best decision-making process with you in mind, putting you in the driver's seat. Quite frankly, rebalancing and tilting the portfolios is what they're getting compensated for in that. So we do a lot of those here, which is great. Again, I don't like the individual brokerage accounts like we described earlier, and the world's turning more towards the advisory accounts. And I just was talking to a guy this weekend who was bouncing off me his advisor's fee. I guess he was shopping advisors, and he had a pretty darn good fee. And I told him that. I said, that's, at your asset level and for that fee, that you're doing pretty good there. So, and we're going to get into that a little bit. I'll bring that up later. The other thing I would say is how we get paid also is, if we do a financial plan, it's a lot of work. It brings a lot of value and sheds a lot of light on someone's situation. So for planning fees, and that's straight up, you ask for a price. What would I pay if I wanted a financial plan? And that's an easy question for any advisor to answer. And another way we get paid, Eric, a lot of times, you have people that wind up in a situation and they need advice, right? And they're not a client. Maybe they don't have assets or don't want to move the assets to you, but they respect you and say, I think you can really help me make some critical decisions. So we have a thing here that we use called advice pay. It's a way that a client, can pay us an hourly rate to kind of work on a project with them to get them just something they need at that point in time. So it's not necessarily asset management. It's really cool. It's not a financial plan. It's not a brokerage account. It's just like, hey, I need help. Can you help me?
Yeah.
How much does it cost? And we have like I said, we have advice pay that we do that with. And it's been really, really good because it's nice to just know that you can help people, that may not have the assets or may not want to move the assets. A lot of times we come across people who have assets with family or friends or someone they've been through with a long, long time. And I say to them, I want that same relationship with my clients. I don't want my clients, moving their accounts to somebody else. I want them to say, I like my guy. He's been good to me. So that's really the essence of the ways we get paid. Yeah. And advice pay, like I said, I think that's an up and coming trend where you get paid for your time, advice, and project work that you do without necessarily having to manage the assets. That's the neat part about it.
All right, Mike, that actually takes me to the next question. What are my all-in costs? And I'll be quite honest, I've never really thought of this as far as working with an advisor because of all the different ways advisors get paid now and kind of the different accounts that can be set up. And I'm sure it's probably pretty individualized, but that's a great question. What are my all-in costs working with you?
I'm glad you asked, Eric.
Why, thanks, Mike.
So, and again, this is where people really think advisors try to do a little maneuvering. And, my approach has always been, I'm going to be 100% transparent. This is how I get paid. So we talked about the wrap fee before, and I'm going to use that as the example. Because that's where most of the people who are coming through the door, that's the relationship they want. They want to have the assets managed for a specific charge, and they get a level of service with that charge. So when I go into somebody's all-in costs, obviously you have to take that asset management charge, the advisory fee, a lot of folks call it, and say, okay, that's what you're paying me, but there's other things in the portfolio that can have a drag on it. In other words, there's other expenses involved. And this is what I always tell people, when I meet with them is, you're paying me this, but the investments I'm putting in this portfolio may have, internal expenses associated with them. For example, a mutual fund has an internal expense. An ETF has an internal expense. Straight up a stock or a straight up bond does not have any internal expense. So I say to the client, it really depends on the composition of the portfolio. But before we pull any levers or push any buttons, I'm going to show you the portfolio, my fee, and all the internal fees associated with it, so there's no surprises. And that's been the most effective way for us to gain business, has been because the people understand it at that point. They're like, okay, you're getting X, and some of the investments in the portfolio cost me Y, so my end cost is Z. I'm like, that's exactly it. And again, what we've been using a lot in recent history has been ETFs. And we'll get into that on another podcast, but what we're trying to do is really, at the end of the day, save people in that internal expense, the other fees involved with the investments inside the wrap account.
Yeah, absolutely. All right, Mike, I want to change gears just slightly here from the fees and costs and everything. And by the way, I appreciate the fact we've talked about you guys being transparent for a very long time. I know that you're very upfront with your clients and prospects, and we even covered a ton of this on the first podcast we ever did, your inaugural podcast. But we're revisiting this now because this is a very, very important question that every person that wants to work with a financial advisor or a financial professional needs to ask. And that is, what are your qualifications?
Yeah, great question to ask. I would say, when everyone should be asking an advisor that question. Specifically, my qualifications are, I have a Series 7 and Series 66 license. That doesn't really answer the question, but there's also designations involved, right? So there's licensing. That's what you're legally allowed to do in the industry. And then there's designations. There's areas of expertise that indicate what someone's qualifications are. So, for example, we talked about the accredited investment fiduciary, the AIF, right? We went into that a little bit on the first question that people should be asking. So we talked about that. Another designation that I possess is a CDFA, Certified Divorce Financial Advisor. 50% of the population, if you look at the stats, do wind up being divorced at some point in their life. So I thought it would be a good idea to have that designation, because so often you come across people who used to have combined assets. Now, because of a divorce, their assets are split. One person in the family may have been managing the assets or been the financial person, and the other person maybe not. And oftentimes we find ourselves working with the people that don't have the investment experience, that want to outsource that part of their life. So the CDFA I thought was crucial because it, puts me in touch with a lot more people, can relate. I can see things through their eyes and really just work with them to try to help them with that designation. Another big designation in our industry is CFP, Certified Financial Planner. That's one that I have been studying for and will continue to study for until I pass it. But it's one of those eating an elephant kind of designations. It's big, it's broad. But, I feel very confident with the AIF and the CDFA and my planning experience that I bring a lot to the table from qualifications. And again, depending on what you're looking for or what a client is looking for in an advisor, they should be asking targeted questions. Obviously, if someone's going through a divorce, you would ask them, do you have a CDFA or do you work with divorcing clients? Outside of that, you just want to make sure that the person, it's more about the relationship than the designations or qualifications. Like the qualifications definitely matter, don't get me wrong. Mm-hmm. But at the end of the day, you have to trust the person that you're working with. And a lot of that really comes down to the relationship. And I'm going to kind of pause this there because I know we're running a little bit short on time. Mm-hmm. We only covered 4 out of the 10, I think, Eric. Is that correct?
Correct, yeah. Yeah, but I kind of knew this was going to happen because you like to spend time with your clients, educating them and making sure they understand what's going on. And it's the same thing when you work with somebody who's just calling in to find out, all about you. You're not going to rush through this. And so I think this would be probably best served if you split this podcast up into 2 parts.
Are you saying I was long-winded today?
I would not say that at all because I value my job. No, we're good. And I apologize to the listening audience if we rambled, but these are questions we get asked, and it's been, like I said, a season of this recently. And I don't know if it's because the talking heads are putting stuff out in our industry about these are questions you should ask, but I've been seeing a lot. I've been hearing a lot more questions from existing clients as well. Mm-hmm. So it's great, and I like to educate them. And when they finally look at what it's all about, in other words, what am I paying you? And they see the level of service, at least I can speak for us, that we give them, they don't have any problem with it. They realize that they're getting a service and there's a value to that, and there's a cost to that, just like anything else in life. So again, it's about that blend and the relationship that you have with the person and what qualifications that they have. Are they qualified to work with me for what I need? And there's chocolate, vanilla, and strawberry. So take your pick. Not every advisor is going to be a great fit. Not everyone is not going to be a great fit. So that's it. You just have to find the relationship, the cost structure, the qualifications that work for you. And it's very important that you ask these questions. Yeah, and one of the other reasons that we wanted to cut this one a little bit shorter and do 4 questions this time, maybe 6 next time, is because you also have some tips for asking questions.
Sure. Yeah.
Yeah, let's share those.
Yeah, well, I would say it's just one tip. I mean, right, we always say the only wrong question to ask is not asking a question at all, right? So people get nervous about asking advisors this. And I think more people who are like our existing clients that are asking me these questions are more nervous than someone coming through the door for the first time. Because again, there's a relationship that we've built over years, and maybe they feel a little bit funny, like, how do you get paid again? Remind me how you get paid. And we don't have any problem with it. I'm like, look, here's your fee structure. Here's the internal costs. This is our planning fee, if they're a planning client or not. So it's very, very easy for us to explain. But the tips for asking questions, obviously write them down before you go meet with an advisor. That would be number 1. Number 2 is don't be afraid to ask the questions. I mean, you need to do this. You need to know if this person's the right person for you. I hate to put it this way. It's a little bit like dating. Either, advisors are going to get you or they're not. And no harm, no foul. Every advisor likes to meet with clients, likes to meet with new people, not even clients, just likes to meet with new people coming through the door to see if they're a good fit. We have a very good process for that here. So again, write it down. Don't be afraid to ask the questions. And the third tip, it's pretty simple. It's, at the end of the day, write down who your favorite advisors were that you interviewed, and then go back to the top. I don't know, if you interview 5, which I would recommend at least 5, write down your favorite 2 or 3 and go back to them one more time to compare apples to apples. And don't be afraid to ask questions that you learn from talking to other advisors, right, in your interview process. Like, oh, advisor X is telling me he's a commission-only guy. Advisor Y is telling me he's an advisory or fee-only person. Where do you stand? Like, and I'd say, well, we're a little bit of both because we were registered that way. So again, it's about the fit. It's about the relationship. Those are my tips. To don't be afraid to ask the questions, and don't be afraid to go back and ask more for clarity. You're making a big decision here. So do your due diligence, do your homework, and trust your gut.
Yeah. Yeah. And you've said this on previous podcasts, Mike, and I the first time you said it, I was like, man, that's really smart. The
Really?
client.
I said that?
You did. In a moment, you're going to find out what you said.
Wow. All right.
You said that they are in control. And I think that that's where a lot of people just don't, I don't know, it just doesn't connect with them. And I think we all have this little bit of fear in our head, or sometimes when somebody is teaching us something, we feel like they're the ones in control, because they kind of are as they teach us stuff. But in this role, yes, the advisor will be teaching you things along the way. You hope so, at least. If they're a good advisor, they're going to be educating you on things. But that does not mean they're in control. This is your account. This is your money. This is your future. You're the ones in control. Ask the questions. Clarify the questions. If an advisor's not willing to spend that extra time with you to clarify something they said, walk. Get out of there. That's just my advice. That's not Mike's advice. That's my advice. If they're too busy to answer your questions, then they're too busy to do a good job for you. Get out of there.
Right. That's a good point. That's a very good point. And I'll be the first guy to tell you this, right? I go to a restaurant that I've never been to for the first time. And the waiter or waitress will come to the table and they'll ask me, they'll tell you, here are the specials, blah, blah, blah. Okay, fine. I'll always look them in the eye and go, what do you eat here? Mm-hmm. And they're like, what? I'm like, what's your favorite thing on the menu? And they'll make a recommendation. I give that very, very heavy weighting. Mm-hmm. But ultimately, it's my decision. For example, if the waitress said, oh, I love the hamburgers here. Well, maybe I'm in the mood for a hamburger or not. Mm-hmm. By the way, that's how I judge every restaurant, is by their burger. That's just me.
Well, that should be everybody's way. I mean,
yeah, kind of, right? Yeah. And so if they make that recommendation, but like you said earlier, Eric, you said, but you're in control. Like, I get what you're telling me you think is great here, but I make that final decision as the consumer. Yeah. And that's exactly right. That's the relationship that we want to have with our clients. They're asking me, the expert, what do you think? And I'm going to tell them, I think this, but then they take that, they digest it, and they're like, but I'm going to do that because I get what you're telling me, but I want to do this. Mm-hmm. Mm-hmm. And that's fine. And that's why we take good notes. Right? Yeah. So I can write down that I recommended this or didn't recommend that. The client chose to do X, Y, or Z from there. Perfectly fine. Yeah. At the end of the day, it's their money. It's their decisions. We're just here for the advice and the guidance. And I'm glad you pointed that out, Eric.
Yeah, absolutely. So this is going to be a 2-part podcast, and we're going to be covering the next 6 questions on the next podcast. But it won't be the next podcast as in the one that follows this one, because we have somebody in between, right?
Yeah, we are. We're going to have a guest. I'm excited for this. I sent him all the equipment. So if he really is an IT guy, hopefully he can get a microphone and headset set up with his computer. We'll find out.
Yeah, I hear there's a relationship from this one.
Yes, yeah. So he was a former boss of mine in my prior career. So he has a lot of dirt on me. So we got to be careful with the questions that you ask.
Oh, I'm starting to write them right now. I'm going to start brainstorming.
This
if
could
the
be
audience
a bad
has
idea.
any suggestions for questions, we can ask Mike's former boss. Please email those to,
Mike3 at GuarinoWealth.com.
That's right.
Let's hope we don't get any, because no, we listen, we had a lot of fun working together. I have a lot of fun on this podcast with you, Eric. And, I'm excited to bring this person on board for my first guest, because it's an interesting history we had together. We're still really good friends now, and I'm excited that he said yes.
Fantastic. Mike, I am excited about that next podcast and bringing him on. But before we wrap up this podcast, I know there's one last thing we have to do. Are you ready?
Always.
Always. All right. Take a deep, long look into the crystal ball.
I see red. I see blue. That's all I got.
You see red and you see blue. Those aren't Christmas colors. Those are different colors.
No, they're election colors.
No, I didn't want you to say that word. Okay.
Can't we just blend them all and make it like purple across the nation?
Yeah,
How
well,
about
as a
that?
colorblind guy, I don't really care what color it is, but it just, the word, the P word now gives me the heebie-jeebies. Just
I'm sorry. Yeah, but I can't help what the crystal ball comes up with. It's just just what happens.
It is what just happens. All right. Well, thank you to the crystal ball, and thank you, Mike, for your time today. I appreciate it, and we'll talk to you on the next podcast. All right.
Sounds great.
And the last thank you goes to you, the listening audience. Thank you for tuning in and listening to the Rewire and Retire podcast with Mike Guarino. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Mike comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thanks for listening today. For everyone at Guarino Wealth Management, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for joining us on the Rewire and Retire podcast. If you want to learn more about how we can help troubleshoot your financial and retirement strategies, click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Guarino Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Investing involves risk, including loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities and advisory services offered through LPL Financial, a registered investment advisor. Member FINRA/SIPC.
Guarino Wealth Management and LPL Financial are separate entities. The opinions voiced in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs and is no guarantee of future results. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs and does not assure a profit or protect against a loss. All investing, including stocks, involves risk including loss of principal. No strategy assures success or protects against loss. Investors should consider the investment objectives, risks, charges, and expenses of the mutual fund and exchange-traded fund carefully before investing. The prospectuses, and if available, the summary prospectuses, contain this and other important information about the mutual fund and exchange-traded fund. You can obtain prospectuses and summary prospectuses from your financial representative. Read carefully before investing.